Now, do you think that's a good idea for business owners to be picking their own stocks and ETFs and things like that? Or should they just say, hey, index the S&P 500?
There's a lot of people out there that should not be picking their own stocks.
I think most
and
people.
that human beings are just hardwired to lose money because they're driven sort of by fear and greed, essentially.
Totally.
Oftentimes, there's only about 10 days out of the 300 trading days a year where the market makes up for that 20% return, where you get that 8% day.
Yeah.
And if you're trying to time the market and you miss that 8% day, your return is going to look a lot different than 20% at the end of the year.
What would the top 2 or 3 things that an entrepreneur can do to make their profits make money in their sleep, to have their money work for them 24/7?
Cash balance plans, because the amount of money that you can put away tax free is really quite shocking, depending on how you set it up.
What's one of the worst investments you guys have made, or one of the biggest mistakes you've made in investment that you're like, oh man, that was just stupid?
Oh, that's a great question. I had one.
Bill and Matt, founders of Vistamark. Welcome to the Founder Talk podcast.
Thank you. Thank you for having us.
Thanks for having us, Alex.
Excited for you guys to be here. So, we were talking a little bit beforehand on a video call. Was it yesterday? No, it was earlier this week, I guess. Feels like yesterday.
Yeah.
We kind of got you guys here quicker than normal. But you founded Vistamark in September 2025, and then you've grown it to $0 to $300 million in assets under management, AUM, since then. So I think there's a pretty cool opportunity to talk about how you guys did that. That might be valuable to the entrepreneurs, business owners listening. And I also think just an opportunity to talk about your areas of expertise. And I'll leave the floor to you guys to describe, how would you describe what your area of expertise is in a sentence or two?
Yeah, sure. Well, just to kind of taking the first part of that, how did we go from essentially 0 to 310 million in
No
a
big
matter
deal.
of a few months? It was a bit challenging. I had the good fortune in my late 20s to become a partner in a kind of a small boutique investment advisory firm, and I had a great mentor and ended up kind of building that business from 0 to 300 million or 300 billion in assets. And then we did a transaction with Madison Dearborn Partners, and I was really the under the age of 50 at the time, and all my other larger shareholders were generally in their 60s, and there was kind of a mismatch from a timing perspective. But we had a 2-year non-compete. So when I sold my interest to leave, I basically spent 2 years in purgatory, kind of waiting for just biding my time, waiting to start. So I had a chance to be a chief investment officer in my late 20s, early 30s, and just developed a lot of really, really good experience, good contacts. And I sort of knew that when the time came, it was actually July 1st, not that I was keeping track minute by minute of my launch for Vistamark, was going to be basically coincided exactly with the end of my non-compete. The only reason it was September 5th is it took the state of Illinois a little longer than you would expect to kind of get the registration done. So, sometimes those things don't go exactly according to order.
Now, did they know that you were leaving to go start your own business, or was this stealth mode?
Well, they knew. Here's the thing. When I left, I basically said, I want to leave. Let's figure something out. And they cut back the 2-year non-compete to a 1-year in exchange for me providing them free investment consulting services.
Okay.
And so we kind of struck a deal there. And then they also allowed me to work. It technically might not have violated my non-compete, but it was kind of in that iffy area. But they let me work for a bank up in Madison as chief investment officer. But it was kind of a different clientele, different enough. I was not allowed to have certain responsibilities like business development or anything like that. And so we kind of negotiated a way for me to keep working. And the great thing is I continue to work with that that company as essentially it's an outsourcer integrated chief investment officer, even now that I started Vistamark.
So what would we're going to get into some of the investment and financial wealth building stuff here in a little bit here. I'm excited to dive into that stuff. I nerd out on that. But what would you say to founders, entrepreneurs, business owners listening right now that want to have that type of explosive growth? And not that we're going to compare their journey to your journey, because everyone's journey is different. And you had decades of experience that probably led you to be able to do that. And you did too, Bill. So, but what would be maybe one thing that you'd say that led to that explosive growth that founders could learn from?
Well, boy, there's a handful of things. Probably the biggest ones are, you have that concern when you're when you're starting a new business. I call it the field of dreams concern. If I build it, will they come?
Yeah.
And I think generally, if you've built good relationships with people. You've been somebody who's done what you've said and said what you're going to do and then do what you're going to say.
Yeah.
And you've been kind to people, thoughtful to people, and you've been useful to people over time. When you actually hang out that shingle, they will come. They will come. Maybe it won't be as fast as you hope, and maybe it'll take a few extra weeks and a few extra phone calls. But I think it's first and foremost is having that confidence and belief in yourself, and that willingness to take that risk and kind of jump without looking. I think that was probably for a lot of folks, myself included, that are starting a business. It's and sometimes you have a golden handcuff in your old situation, so you don't have a bad situation.
Yeah.
And sometimes you need some sort of catalyst to kind of trigger you along. But I think it's to be real intentional with people. And, obviously any business requires sales. You need to bring on clients. And so it's just maintaining those relationships and kind of being very outbound and thoughtful about your communication with people.
Would you add anything to that, Bill?
Yeah, I mean, I would echo that same sentiment. Relationships are everything in this business. And, frankly, when it was time for me to decide whether I wanted to work for a big wirehouse or an RIA or start something on my own, I wouldn't even have been in that situation had I not spent 10 years at some great other organizations building my network, because these things take time. If you're trying to bring in a $10 million relationship, that's a lot different than bringing in a $500,000 relationship. And so having that runway and having that great experience and training all along the way has really positioned me to join Vistamark and hit the ground running with my own existing network, but also relying on Sean's network and Matt's network, which I was unaware of at the time. And that's created a lot more opportunities for us as well.
Yeah. It's kind of funny how business fundamentals really don't change over time. It's like do good, have good service, good products, take care of your customers. They'll refer other customers to you. They'll stay with you longer. And even stuff like this. I think this was maybe we weren't able to catch for this maybe 20 years ago, but now we can sit down and have these conversations that we would have had anyways, maybe in a coffee shop or in an office, and now we're able to put it out there in the public. But just taking care and doing right by people, and that comes back to you tenfold. And even though the ways that we do it may change and the technology changes certainly over time, I think a lot of the fundamentals remain the same. Build trust, credibility, offer good products and services, build good relationships. As easy as it, or as simple as it sounds, it's not always easy.
Yeah, and there's been a ton of consolidation in our industry, so I think that's creating a lot of opportunities for us. So folks are getting gobbled up.
Yeah.
And whenever that happens, there's a change in investment process or a change in philosophy or a change in service model. Clients don't necessarily, oftentimes they select an advisor based on, a particular deliverable. And then suddenly that deliverable changes, the leadership changes, I think getting back to that boutique-y vibe now, there's just a lot of these giants that are now gobbling up everyone, getting back to, I actually have a name and a face. I get to work with the owner of the business. I get to work the owners of the business. I get to work with the senior level people. I get to talk with the actual decision makers. That's a huge reason I think out of the gate we've been so successful out of the gate is that the ability to kind of cut through all the layers of bureaucracy and just deal with the decision makers and work. And that's a great thing about being a boutique. 5 or 10 years from now, are we gonna? That the challenge will be to try to maintain that boutique.
Yeah, exactly. Would you guys say that you're in the wealth building business to a degree?
Yeah,
very
much.
Well, I wanted to share this stat with you. I did a little bit of research on this, but it said roughly 34% of small to medium-sized business owners have no retirement savings plan at all for themselves. What are your thoughts on that?
We have a retirement plan. We launched it we just ran our first payroll, and 401k deferrals all went out. So we have that plan, and we have a plan for our employees as we bring them on. But every single client that comes on board, from a private wealth perspective, we have a plan for. So that's Bill's responsibility in part. Sean and I are more the investment nerds, the guys that get up in the morning and eat, live, and breathe the markets. But
what are your thoughts on the 34%?
That's unbelievable. My thoughts are that can't be true. It's hard to believe that.
Yeah.
So
When I was doing the research, it looked like that a lot of them are either just like holding it off until later. They're waiting for some big sale of their business later. They're reinvesting a lot back in their business. I had a an owner of a financial firm, a pretty large one, and I was telling you guys last week, and he said one of the biggest mistakes that founders make when building wealth is that they only invest in their own business. And as much as you kind of need to do that sometimes, especially in the beginning, it's like go all in on that thing and don't, get sidetracked. You need to pour money back into the business, whether it's hiring people or technology or this or whatever it is. It can also be a detriment. Because if you don't set something up that's, another income stream or investment or a retirement fund or whatever it is, something could happen to the business, or maybe you change directions and all of a sudden that investment egg isn't there. What are your guys' thoughts on that?
no, I think there's some healthy aspect of being all in on a business.
I do
but
too.
That's a metaphor. That's maybe more of a metaphorical truth than okay, maybe you should have a little bit set aside for a rainy day and or retirement. But I think to the extent that you look, first and foremost, when you're starting a new business, you need to get that thing up and running. And, but to the extent that you can set dollars aside for retirement long-term, that should be near the top priority number 2, right after getting your business up and running and going.
Yeah.
And I think the problem perhaps is that some folks may put it as priority number 5 or 10. No, it should be number 2, probably. It's first pay your business, second pay your retirement, then worry about everything else.
So if you're 45 years old, you're a 45-year-old business owner, and you have no retirement or investment accounts or anything, are you screwed?
No, your business better be successful. That's
What if you're not going to sell your business?
if you're not going to sell your business, you're going to be in trouble. Probably.
You think 45 is you're kind of past the point where you can't catch up, or do you think there's opportunity still at that point to still, hey, you can still save for retirement?
There's always opportunity to save. It becomes a much higher climb. The longer time is on your side when it comes to savings, and the earlier you do it, the easier it is.
Right.
The longer you wait, the harder it becomes because you have to catch up. You lose I think it was Albert Einstein, right, that said the most powerful force in the universe is compounding interest.
Yeah. And it kind of is in a lot of ways. In more than just investing.
I actually said that, but it was attributed
something like that, yeah.
So in time is your biggest ally there is time.
Yeah.
And also time in the market. You don't want to be
not timing the market, but time in the market.
In the market, not timing the market. Because of that power.
Explain that principle there.
So basically, you want to take a long-term investing approach because you're going to see ups and downs in the market. There's going to be volatility no matter what you look at. But over a long period of time, you see that line start to straighten out.
Right.
And typically, equity returns return anywhere from 5 to what we've seen lately, 20%.
Yeah.
And you want to be there to realize those returns because oftentimes there's only about 10 days out of the 300 trading days a year where, the market makes up for that 20% return, where you get that 8% day.
Yeah.
And if you're trying to time the market and you miss that 8% day, your return is going to look a lot different than 20% at the end of the year. So time in the market's important for what Matt said on, the power of compounding, but just also being able to stay invested and gain exposure to the market, every single day, and take more of a disciplined approach.
Yeah, and there's the old rule of 72. If you take 72, divide it by your rate of return, that's how long it takes you to double your money. So just really quickly, if you think you're earning a 7.2% rate of return, it takes 10 years to double your money. And so if you're factoring in a 30-year time frame, there's 3 doublings of money occurring in that period. And that second double, if you shave that first 10 years off and you didn't save that first 10 years, there's a doubling factor that's lost in your savings. And so it's like I would early and often, like one of the things that's a great idea is setting up IRAs for your kids. You can actually do that now because it's the amount of money you have to set aside is so small if you're doing it early.
Yeah.
If you're doing it later, boy, you better, you have to, pony up big chunks of your money to catch up later.
Right. So what would your advice be to someone in their late 40s, early 50s that hadn't really thought about retirement? Where would you guide them? Not necessarily financial advice, but just if you were in that position.
Yeah, first and foremost, I'd go to the Vistamark website and find our contact
This podcast
information.
is brought to you by. No.
No, I'd be intentional about it. Don't put it off for forever. Think about it. Have a plan for it. Talk to the right people to get it set up, and not. Obviously, you need to spend 99% of your time on your business and getting that up and running and making that successful, but don't let other things. And by the way, it's not just retirement, it's other things, family, it's everything's
risk.
Outside your business that you should be spending some time with. And, if you, there's nothing worse than potentially going all in on your business and letting the rest of your life fall apart,
Exactly.
Whether it's your family, whether it's your retirement, whether it's just your hobbies and everything, to become a well-rounded, happy person long-term spiritually, you need to have, some work-life balance. So,
well, what does retirement mean to you guys? And do you think retirement's overrated?
It's interesting. I actually had to ponder retirement a little bit when you have a non-compete and all of that, like being forced retirement. And, for a long time, I always look forward to retirement as like my reward for all the hard work. That was like it earlier in my career is kind of how I thought of retirement. Now I view it as something I may not ever want to completely do, that there might be a time when I want to step back and I want to spend less time kind of doing things and rely on other people to kind of take the leadership role. But I enjoy working. I love
Me
working.
too.
And so like the idea of me of stopping working now, like for the most part, I could have retired already.
Yeah.
So if I wanted to, but I love what I'm doing. And if you love what you're doing, life is really good.
Yeah.
For sure.
Yeah, you will.
And just going off that point, I mean, Matt's got a wealth of experience being the CIO of a multi-billion-dollar RIA. And so when I decided to partner with him, it was more about the mentor relationship too.
Yeah.
And the experience that, I can learn a great deal from this guy, and Sean, our other partner as well. He's really focused on the alternative investments where, I don't have as much experience in that area, but I lean on him to bring that expertise to the table. And I just feel like, leaning on that experience and those firsthand examples has been invaluable learning from him every day. Some of these one-liners that he'll drop in the room, I'll just jot them down and use them in my next meeting. It gets down to even that level.
Yeah.
So it's been a privilege to just have the opportunity to learn from somebody like Matt and Sean, and we will continue to kind of look for opportunities to hire individuals that represent those same values and want to educate the next generation, because we're not going anywhere. We want this firm to outlive even our retirement.
Yeah, that's a great point, Bill. I mean, the greatest joy that I've had in this industry has been the mentorship opportunities to see young people, to help them develop and grow and become who they who they want to be from a professional perspective and a personal perspective. I was fortunate enough 25 years ago, the co-founder of DeMeo Schneider, Bill Schneider, took me under his wing. I had a great mentor, and then had a chance to start mentoring others, including Sean McEvely, who's our partner. I was paired up. We both played football at Northwestern, and the program pairs up older players with younger players who played the same position and who had the same majors. And so Sean was about 15 years behind me, but he actually interned with me 15 years ago when he was in college. I told him to do the CFA program. We stayed in touch, had that great relationship, and then when the opportunity came to partner up, we did. And it's weird because I'm in the Bill Schneider role now, the mentor role. He's in the mentee role. And the one thing you learn is when you mentor other people, you end up learning more from your mentees than I think they learn from you. And so because
You're teaching and you're thinking about things and
yeah, if you're a mentor and you know everything, you're
Yeah.
probably not a very good mentor.
Right, exactly.
Because you're
Yeah.
not listening
Yeah,
and you're not absorbing
totally.
what you're learning. And just to see, I think this in Vistamark, I really want, it's folks like Bill, he's 15 years younger than me. Sean's 15 years younger. Our other partner is about 10 years younger. Just to watch them take our business to the next level is going to be really, really exciting for me.
Yeah.
To watch them grow and develop and become better versions of themselves. And I want to keep growing. And like everyone needs to keep growing or developing.
Totally.
You're either getting better or you're getting worse. I learned
Well,
that from my
yeah,
early days
agree with
playing
that.
sports.
You guys just hit on, I think, two things that are really important for me personally in my professional and personal life, which is growth and fulfillment. Growth, continuing to learn and get better and improve your game. I think if you're not doing that, yeah, you're dying in a short way. Like you're in a slim way, you're kind of that line's going down, right? Whether you notice it or not over time, it does. And then the other part is fulfillment, is giving back, is helping other people, is feeling good because you've given to some other cause or person, seen them grow, and that just feels good. Going back to and I think that plays a role in the retirement conversation, which is like, if you just retire and it's all about you and you're just gonna play golf all day, maybe for some people that's fine. For me, that would just feel empty. And that's why I say sometimes I think retirement is a little overrated in that. And I think people are starting to switch their philosophy on it. Kind of like you just mentioned. I don't think I'll ever retire either. I want to do something. I want to give back. I want to have a craft. I want to build something. I want to, maybe on my own terms. Sure, maybe it looks a little different than it does today when I'm 80, or 75. But I think we just like, I don't know, the way I grew up is like, you just work like a dog your entire life. And then, you get to 65 and then hopefully you can retire and like just sit around or do whatever you want. That seems like a broken philosophy to me. And sometimes I'm like, yeah, save, invest. That's very important. You should be responsible with your money and have things set aside, kids, family, yourself. But at the same time, don't like sacrifice everything for some later date 30 years from now that we don't even know that we're going to get to. I mean, that's the other thing. Is like, you may be the best investor saver in the world and then you get to be 70 and you die at 68. And it's like, so I don't know. That's my thought on that. I think I see a balanced approach. If you can find something, I think you mentioned your philosophy used to be, kind of working up until you can get that reward at the end. And now what you've done basically is you're finding the reward now.
Right.
And that's like such a big shift that I hope people can learn from that. But okay, so next week I'm doing a live next week about how founders, entrepreneurs can take the money that they make, the profits they make, and turn it into wealth, make their money, make money, more money in their sleep. And I'm not talking from an expert standpoint. I'm showing highlights of our show from people that have built these types of businesses like you guys. I'm highlighting experts that people would know in this industry. And I'm just kind of sharing the information and being the curator and giving my thoughts and perspectives on some things. What would you say if you were running this live? What would the top 2 or 3 things that an entrepreneur can do to make their profits make money in their sleep, to have their money work for them 24/7?
Yeah, I mean, it's a great question. A lot of our clients are actually entrepreneurs who sold businesses, and they kind of have to switch gears from running a business, where you invest in your business, to being kind of a different kind of investor, and generating cash flows from your proceeds from the sale of your business. Well, I think first and foremost, you got to find the right partners. You got to find the right people to work with to help you with that. You might be an expert in your field and whatever that business is, but once you sell that business and you're kind of getting involved with, and you're trying to convert into a family office or something like that, finding the right partners. And that's one of the things we do with our clients. We have a lot of experience helping folks doing that.
Let's say you just had to give them advice, though. They couldn't come to you. What would you?
I think the advice would be engage with folks before you do a transaction. If you are going to sell your business, make sure you're selling your business for the right reasons.
What do you mean?
I think make sure that you have a plan in place and that you've got a lifestyle, you've got a next chapter of your life that you want to engage. I think some people feel like, private equity might come in and start dangling dollar signs over people. And then there's this need, I like my business, I'm running my business, I'm enjoying my business, but boy, if I don't cash in right now, I might lose my opportunity.
The FOMO.
I don't know about that.
Yeah.
Like if your business is successful, you're energized about it, keep it. Keep
Yeah.
private equity away. I mean, they'll always, if you have a good
Yes.
business, there will always be a time that
Yeah.
you can transition it later. So, I think the advice I would give them is figure out what you want to do in your life. Like, how do you want to spend your day? Like money, it comes and goes. Time is finite. Time is the most finite thing you have. And how do you want to spend your day?
Well, what if you're not going to sell your business? You've got a successful business, you're going to run it, but maybe you're making profits and you're just putting your savings account and you're kind of stacking. So you're like, I got an extra $100,000 or $200,000 or $500,000. What are some things that they could do to help their money, make money in their sleep?
Well, I think
more tactical stuff.
I think first and foremost, make sure you have a company retirement plan and you can maximize the tax deduct, whether it's a 401k plan or a cash balance plan.
So let's talk about that a
Yeah.
little bit more tactical. Like what is the plan an entrepreneur should get for their savings or retirement account? How much can they put in it per year? Why would they do that?
Yeah, I mean, it depends on your age. Like typically, you can put upwards of $30,000+ if you're over the age of 50 into a 401k plan.
Yeah.
So right out of the gate, that's a great way.
Solo
low
401k.
cost. Solo 401k if you're a one-person show or whatever. Then if you have a few more, there's things cash balance plans, which are I used to make fun. It's like the ultimate scam from an IRS perspective because the amount of money that you can put away tax free is really quite shocking, depending on how
Really?
you set it up. Yeah, and again, there's more complexity involved here.
What are those called?
A cash balance plan. So they're
Cash
kind of hybrid defined contribution, defined benefit plans.
Mm.
And so if you look at, and that was one of my specialties many years ago. We worked with, in my prior firm, I think it was over 20 AM law, 100 law firms. And so you look at how the large law firms and partners and defer income on a tax tax favorable retirement accounts. They use those cash balance plans.
Interesting.
And
So how do
so-
you not pay taxes? What's the
It's basically there's a present value calculation that goes into, based on your age, that allows you essentially the older you are to defer higher amounts of dollars because it's technically structured as a defined benefit plan, so a pension plan. And then what often happens is these plans, they get up and running, they make these large contributions, then you end up terminate the plan after a few years, and then it converts to a defined contribution plan balance, and then you can enroll it over to IRAs. And so it's for better or for worse, a little bit of a loophole.
Yeah.
They
Well, you
have-
gotta take
that
advantage
they
of
have
that
not
stuff,
closed because lawyers give a lot of money, law firms give a lot of money to politicians. I
Right.
think it's the reason. that loophole isn't
Oh, for sure. If there's a loophole, it's because somebody paid to have it in there. Yeah.
Exactly.
Well, you gotta look for the legal loopholes and you gotta know about them because they're not taking care of us. In terms of they're taking our money, they're spending it. There's fraud. There's all kinds of things we're uncovering now, and I don't think the government is that efficient. And so it's like you gotta look out for yourself, and you gotta find the law and understand it, or find a professional that does. And you got to get those savings. But could you break down the difference between Roth IRAs, traditional IRAs, SEPs? Like there's all these like lingos that I don't think a lot of business owners quite understand because they're not in the business. Like break those down for us. 401k, Roth, non-Roth. Like what are the differences?
Yeah.
here?
I mean, I'll start at a high level, and I'm sure
Yeah.
Bill can get more granular on it. But at a high level, there's the traditional contribution and a Roth contribution.
Okay.
And that's probably the first helpful place. The traditional contribution can fall in this subset of all those other things.
Okay.
The 401k, the IRA, the SEP IRA. But basically what a traditional contribution, qualified plan contribution means is you're getting a tax deduction today to put your money in, and then your money grows tax-free when you invest it. And then when you pull the money out, you pay full income taxes in retirement.
Dang.
And so that's the rub. In a Roth, whether it's a Roth 401k, a Roth IRA, it's the exact opposite. You do not get the tax deduction today. So you forego that benefit today, but in exchange for that, you get tax-free growth. And then when you pull your money out in retirement, there's no taxes.
So if I put in 100, so Roth is better because if I put in 100,000 for this example, and then it grows to 250, and I pull it out, I'm not paying taxes on 250.
There is a stipulation. When you do a Roth, you do pay on that $100 you put in. So you pay the tax up front, and then it grows tax-free, and then you pull it out.
So, but if I put in 100,000, sure, I'll pay tax on the 100,000 now, right? And then but if it goes to 250, now I'm not paying taxes on 150 versus.
Well, it's a calculated. It's not quite as simple because what tax bracket are you going to be in retirement?
Right. That's
and then there's also our tax rate's going to be higher today or higher in the future.
Yeah.
And so there's a lot of present future value calculations. And then generally the one other thing is that a typical IRA has something called a required minimum distribution. So when you hit age, 70, 72, or whatever it is, I should know that, that they force you to take money out of it every year, which means you have to pay taxes. If you're in a Roth, you don't have that. And so there's actually a calculation we help clients do where you can actually convert your traditional IRA into a Roth IRA and pay all the taxes up front. So it's a complex calculation you can do to say, hey, maybe I should convert this $100,000 or $200,000 account from a traditional to a Roth, pay some of those taxes now with the idea of foregoing taxes in the future.
Right. And when you say pay taxes now in the traditional, let's just use the example. I put $30,000 into my retirement account. If it's a traditional, I can't deduct that basically, right? That's my income. I can't write that off. But if I do a Roth, mixed up. Opposite. Sorry. Yep. Traditional, I will not get the benefit of. No, I will get the benefit of tax break. I'll deduct $30,000 as a business expense. As a Roth, I cannot deduct that as a $30,000 business expense, but I will have that tax free when I take it out.
Right.
Got it. Some people may know that, but I think a lot of people are just like, I don't know what the hell the difference. And sometimes you even get it explained to you, and you're still like, I still don't get it.
Yeah. And the other half of your question was like the difference between a 401k, a SEP IRA, and IRA. 401k is kind of if you're a company and you have multiple employees, that's probably the route you want to go. It kind of gives you the most flexibility. You can match employee contributions and do things like that. And then a SEP IRA is usually much more a small business, more of a profit sharing contribution. So it's sort of halfway between a 401k and a traditional IRA that you're allowed to have as a company. And
and I believe you can contribute a little more to a SEP IRA
than a traditional IRA.
Yeah, I think that's the benefit. $50,000.
Okay. Yeah. Now let me ask you this: in a 401k, who is in there going and doing? Are people trading day to day? Is it week to week? Is it AI doing the trading now? Like, how does that work?
Yeah, I mean, a 401k plan and,
or mutual funds.
Part of my prior business did a lot of advising on setting up multi-billion-dollar 401k plans. But it's basically a company selects a list of, 1 to whatever number of funds, makes it available to employees for employees to select. Right. So employees get to go in and decide how I want to invest my money across these funds.
Yeah.
And often there's something called there's something called a target date fund in there as well. They've become very popular in recent years where they have a year in the name. So there's the 2060 fund, which is for people who plan to retire in 2060, and then the fund gradually reduces aggressiveness until you get to that retirement date. So right now it's usually employees that are they decide how to invest. If they want to be something called 404C compliant. The Department of Labor actually says that if you want to be off the hook as an employer for investment decisions, you better allow your employees the flexibility to choose their own funds and to make changes to their accounts. And so there's this thing called 404C that almost every 401k plan has. So employees are ultimately responsible for making their own decisions. And then there's also oftentimes in a 401k plan, there can be something called a self-directed brokerage account. So rather than just being limited to those, 20 or 30, whatever
packages,
it might be, funds that an employer might offer in their plan, an employee can go outside that and go buy ETFs or go buy stocks or do whatever they want.
Now, do you think that's a good idea for business owners to be picking their own stocks and ETFs and things like that? Or should they just say, hey, index the S&P 500?
I think it depends. It depends on the owner. I think there's a lot of people out there that should not be picking their own stocks.
I think most
and
people,
and they should not be maybe getting too cute. And
Yeah.
I think if you're a fairly sophisticated investor, and by the way, if you're really there's a lot of people that think they're sophisticated
Yeah.
investors and really are not.
Right.
And
well, sophistication, do you mean being able to read a chart and look at like
no,
trends?
I mean being capable of making sound investment decisions, and
without emotion too.
that's a huge part of it.
That's a big
And
one.
So it's number one, having the right high level brain function and having the knowledge base, and then number two, not listening to their lizard brain.
Yeah.
Because human beings, even very sophisticated investment people, all human beings are hardwired to lose money. I've written a couple of books, and the most interesting chapters, by the way, are the ones on behavioral finance, about how human beings are just hardwired to lose money because they're driven sort of by fear and greed, essentially.
Totally.
And if you go back, for example, to like April of this year, when Trump did the old Liberation Day tariff announcements and the markets went kaflooey,
Yeah.
exactly the right thing to have been doing is what we did, which was to rebalance client accounts into equities.
Right.
But what was everyone else? I mean, the fear hits people.
What do you mean you balanced accounts and equities? Break that down.
Yeah. So if a client was set up and they were a 60-40 account,
Which is what?
In 60% stocks, 40% bonds.
Mm-hmm.
And then they went into Liberation Day, the stock market sold off, their portfolio maybe went to 50-50 because the stocks fell
Right.
a lot more than the bonds did.
Right.
We would go into our client accounts and rebalance back to 60-40, which essentially means selling bonds, buying stocks.
Mm-hmm.
And your typical investor who's hardwired to lose money is bailing out because they think the world's coming to an end. We're going to hit a recession and the economy's over.
Right back up.
And it's the same thing in March of 2020 during COVID.
Yeah, that's true.
I did a video, sent it out to all our clients in March of 2020, explaining to them, hey, we're going to be doing something that you can't believe. We're going to be buying stocks right now. And people were looking at me like I had a third eye. And it's like, no, there's not a single person that you talk to that thinks the market has bottomed. You know what that means? It might have bottomed because markets kind of behave the exact opposite of human psychology.
Isn't that true, man? That is true.
Yeah, and because markets are nothing more than a weighted average of everyone buying and and selling.
Yeah.
And typically, when there comes a moment when everyone is totally bearish, that means there's no one left to sell. Everyone's sold who's going to sell.
That's
and
right.
that's when the market bottoms.
Yeah.
So
that's how it happens like every single time, I feel like. What's one of the worst investments you guys have made, or one of the biggest mistakes you've made in investment that you're like, oh man, that was just stupid?
Oh, that's a great question. I had one, call it 20-something years ago, coming out of like 2003, maybe 2004, started to do a lot of work on commodity futures contracts where you could go back and you could do a back test and look at commodity futures contracts over time. So the ability to invest in oil futures or indexes that have oil futures, gold futures, other futures. And if you kind of look back at the long-term history, you'll find a history that showed a risk premium of commodity futures being on par with equities.
Okay.
Meaning that they've generated a return historically on par with equities. And then with that kind of a positive implied 2% risk premium above and beyond kind of what you might expect from short-term T-bills and kind of inflation on top of that. So you're getting to an equity style return. And I think the problem is they started to roll out these indexes, and these indexes became investable. And so we started to deploy some of these strategies within client portfolios with the idea that the big reason here was we're not owning commodities because we think commodities are just great. But when you look throughout history, when Saddam Hussein invades Iraq, the stock and bond market doesn't like that. Oil tends to pop and commodity. And when there's unanticipated inflation, commodities tend to pop and stocks and bonds go down. So it's a great diversifier in theory. And so I think that we started to move into these, and I think the problem was they came out with these investable indexes. And I think what happened is it's kind of like a little bit of the Heisenberg uncertainty principle. The minute that you observe something, it changes it, where it is. And so I think all this money started finding its way into commodity futures indexes. And I think that fundamentally altered the return profile because it was once money starts finding its way into it, then it changes kind of the historical dynamic. And so a lot of I think the back-tested history of the analysis shows. So anyway, there's a lot of these funds that went through a prolonged period, maybe a decade of flat to negative returns.
Yeah.
In a period where, theoretically you did it for diversification and not for returns. But it was kind of a painful lesson, I think, that you never see back tests that don't work. And the minute that everybody finds something that's worked really well in history, sometimes that won't work in the future,
Right.
because the people adapt to it. And by all that money finding its way into commodity indexes, fundamentally altered the commodity futures markets and removed a lot of the opportunity set longer term.
Can you guys explain how stocks move up and down? Because to somebody that doesn't know a lot about it, you would think, okay, if there's more demand, obviously the price moves up. If there's, less supply, things like that, right? And then there's obviously just sentiment and other things. But from a simplistic standpoint, if someone's selling, that means someone's buying. If someone's buying, that means someone's selling. So if you say, well, everyone wants to buy the stock, well, then they got to get the stock from someone that's selling it. So doesn't that offload that pressure? Can you explain how stock markets move?
Yeah, sure. I mean, does the demand for something outstrip the supply? And if it does, the price goes up. And if there are more sellers than willing buyers, the price will fall until it gets to a low enough level that induces more buyers to come into the market. So it's very similar to how any other market works.
Can you explain like a lemonade stand, right? If I got a lemonade stand, how would that compare?
Yeah, I think if you try to sell lemonade for $5 or $10 a drink, there might be somebody that walks by that's super, super thirsty and will pay $10 for it. But you're gonna say no to. There's probably going to be dozens of people that say no to you for that, because it's just too expensive. I don't need lemonade that bad.
Right.
I don't think lemonade's that good. Like lemonade's good, but it's not $10 good. And then if you price lemonade at 25 cents, maybe almost everyone that walks by will buy it. The problem becomes is that maybe it costs you 50 cents to make it. So you're losing money on it. So you have to find the right price. The market will find the right price. Maybe it's $1 because it's enough that you can make money on it, and there's enough people that walk by and go, yeah, I'll buy lemonade for $1. And it's finding that right mix of supply demand that sets the price of lemonade. That's exactly the same process that happens with NVIDIA stock or Microsoft stock or any stock in the market.
I think some of the confusing part of the stock market is there's kind of two parties that both own the stock. Like the lemonade stand that was a good breakdown. Someone has a lemonade, someone has cash. And this is like, isn't it kind of somebody has NVIDIA stock to buy, someone has NVIDIA stock to sell. So that's where it's like,
somebody has to have cash to buy that stock.
Right.
So somebody owns NVIDIA stock, somebody has cash, and they're going to use that cash to buy the NVIDIA stock from the person that owns it. So they do need to have the cash.
True. Yeah, that's true.
I think beyond price too, they're looking at the value of the actual security, right? They're buying the perceived value of what the security is going to be in 10 years. So, people are taking advantage of maybe some foresight around information that isn't currently all available to market participants. That's how you get a little bit of an edge.
Right.
Yeah, and that's the key. Is that everything in finance, it's the value of something is the present value of all its future cash flows. Yeah. That's true of everything. Yeah. And that's often mispriced in the markets like that. I'm sorry if you're an efficient market, die hard, University of Chicago located over here, although that's the founders of the efficient market hypothesis are here in University of Chicago, although so are the founders of behavioral finance are from the University of Chicago too, which are the two kind of exact opposite kind of mindsets. But yeah, that anything out there, a bond, a stock index, the value of it is based on the present value of all its future cash flows. And so if somebody's projecting, what is that stock going to be? And for stocks like NVIDIA, like they're not paying dividends, it's growing. And the theory is kind of predicated out 20, 30, 40, 50 years from now, there's going to be a massive pile of dividends being paid in NVIDIA. And that's driving the value of NVIDIA today. Whereas there's other stocks that are out there like the former Philip Morris sells cigarettes. They're not growing very much. They're probably shrinking.
Tough business.
But but the valuation of that stock is really low. So it has a kind of a high embedded return on it because because the hurdle is very low.
Right,
there's not a
right.
big expectation
Yeah.
of growth coming out of it.
Yeah.
And so
Are there any stocks right now that you guys are excited about that you'd be willing to say, like any ones that you're like, I think this has a lot of potential still? Like Nvidia, is that top? I mean, is there a lot of potential in Nvidia anymore, or Amazon?
I think longer term, there's a lot of opportunities out there. I think when you're talking about trading a stock, depends on, like, I wouldn't, I'm not going to be talking and speculating about stocks that might be good to own for the next week, month, or year. But I think when you look long term at the markets, the AI, yes, these stocks are valued at a healthy rate now, meaning the price to earnings ratios are elevated. But this is a little bit different, though, than I remember 1999 when Pets.com was worth $10 billion. It was worth $10 billion because they were selling pet food online. That was a bubble. That was a clear tech stock, internet stock bubble. When you look at companies like Nvidia, Microsoft, even Facebook, Google, all these that are kind of that are sort of AI plays, they have rich valuations for a reason. But I think what people are missing with the AI story is not so much those AI tech companies, because yes, AI tech companies have the ability to do really amazing things over the next 10 years. But look at the products that they're selling. They're going to allow businesses like Vistamark. Like the real benefit of AI is not going to be these tech companies that are driving the energy. It's going to be the people that adopt it and use that to grow their businesses. And I'm talking insurance companies. I'm talking manufacturing companies. Every business in the world is going to have the potential to grow and improve productivity at their business and improve their profit margin and or reduce the price of their product because of AI. And there's going to be disruption in terms of people losing their jobs, but there's going to be a lot of new jobs created too as a part of it.
One of the best performing assets over the last 5 to 10 years, if you look at the data, is Bitcoin. Cryptocurrency, blockchain technology. What do you guys think about that? Because I know you work at family offices, institutions. It seems like a lot more institutions are getting involved in this type of stuff. And then we could talk about the Clarity Act right now that's out there that just faced a lot of kind of pushback from Coinbase. But what are your thoughts on the future of cryptocurrencies and blockchain?
I've been wrong at every turn here because I was one of those early ones that was like, this whole thing's a scam.
That was most people.
And it still looks like a scam to me because it's a
cryptocurrency or blockchain technology or Bitcoin specifically?
Well, I think cryptocurrencies, blockchain technology is a great technology, and it's a great solution in search of a problem. And I don't think we really had a problem that Bitcoin came in. Like one of the main things you want from a currency, for example, is you want a currency to be stable. Right.
Well, I don't think Bitcoin's a currency. I know it's cryptocurrency, but I think it's an asset, like a digital gold.
Then it's something else. And then if it's not a currency, it's some sort of other asset.
Right.
And what is that asset then? And digital gold. Okay, gold has value. It's had value for thousands of years because it's shiny and pretty.
Right.
And there's a finite amount of it. And theoretically, there's a finite amount of Bitcoin, but there will be when the mining is done, and but at the same point, what does it do when you convert it to cash? It's not like a stock where there's a dividend being generated by the stock or a bond. And so if you're doing that present value of a future cash flow, all it's predicated on is a future supply demand of Bitcoin or a future supply demand of that cryptocurrency.
Right.
Which you tell me what that is. There's no backing. There's no one really backing it. Kind of like U.S. dollar is backed by whatever that means. And
what is the back these days?
That's the most bullish case for cryptocurrencies is really a bearish case for all fiat currencies.
Oh, for sure. That's what it's hedging against. The currencies we're going to print more money. The Fed's going to inject more on their balance sheet. And
I think the idea is that maybe Bitcoin's the one-eyed man in the land of the blind, and the blind is all the other currencies because we've just gone out of control from a debt perspective.
Yeah.
But I still think that if you believe that, gold may still be a better asset to own than crypto, and from a protection perspective, because you need the internet to work for crypto to work. And if you get into a world where there's no longer fiat currencies, governments fall.
Oh man, that's a pretty crazy world.
So I call it the Mad Max scenario.
Now we're going way out there.
In a Mad Max scenario, you're going to want gold, and you're going to want a mercenary army.
You're going to want, you're going to want in that, you know, you're going to want
food.
You're going to want
farmland,
guns.
Yeah.
Guns. People are like, I need all the food, I need all the gold. I'm like, dude, if you got the guns, you got all that shit.
This reminded me of a funny joke in January of 2009, coming right out of the financial crisis.
Yeah.
I looked at high yield bonds. And, high yield bonds were priced like the credit was priced for the end of the world, the end of civilization.
Yeah.
The stock market was just priced for a recession, severe recession. And I said, well, you should put half your money in high yield bonds and the other half in canned foods and ammunition, because one half of those trades is going to be really good. Because,
yeah. Well, what about like Ethereum? Because, Ethereum, the stock market's kind of being built on the chain. It seems like more things are going to be tokenized over the next couple of years. Government officials, people at big institutions have already said that they're going to be bringing things on chain. Ethereum seems to be the rails of that.
Yeah,
Do you
I think
see value in that.
The tokenization of various things. So kind of an alternative payment method.
Yeah.
Using a blockchain technology, to me, like that is the applicable solution here, like as opposed to more of just a general cryptocurrency,
right? Where
the supply demand is going to drive it, and it doesn't really serve a specific use.
Yeah,
I think when you look at but the technology itself is amazing, and I think what it's able to do from an alternative payment, like even in terms of like things like paying for AI use and paying for other things with these tokens. I mean, it's kind of a version of like when you go to an arcade, you got the tokens. You used to have to use quarters. Now you would go and you would convert that into a token, and you'd be able to use those. It's the same concept digitally, which I think has a ton of value. And I think there's going to be a lot of use of that technology going forward. And 5
Smart
to 10 years in ways that we're not
and
even thinking about it right now.
Yeah, I think so too. What are your thoughts, Bill?
The only thing I'd add to that is, if you're going to invest in cryptocurrency, make sure that you have the stomach to deal with the volatility that
right.
you're going to experience. It's like a roller coaster ride.
That's right.
I haven't personally invested in it myself, but
I have.
You bet I'm looking at it every day. And I do have those days where, you miss out on a 5% return and you have a little bit of FOMO. But, going back to what Matt said, we're more focused on kind of those traditional asset classes that we've relied on for decades.
Mm-hmm.
But we certainly don't rule out any new innovative products that are coming out. And so we're definitely on the pulse on all the Bitcoin stuff. And we're tracking it closely.
Yeah, for sure. If the Clarity Act passes, are you guys familiar with that? What's going on with that right now?
A little bit, but not.
It's
not
basically it got passed in the House late last year. And it's basically the regulation for cryptocurrencies, blockchain. It's right now we had the Genius Act, which is more about stable coins and that kind of stuff, which is a little bit easier to understand. It's a digital dollar. It's backed by treasuries or pegged to the dollar. But the Clarity Act is more blockchain, cryptocurrencies. Are these things going to be regulated by the SEC, their CFTC? Like, what is all that? And it seemed like it was about to get passed through. Crypto's going like this, and then all of a sudden, Coinbase and some of the big crypto companies and lobbyists were like, no, we're going to stop this, because the banks jumped in and said, well, we don't want you to be able to earn yields on your interest, or whatever you want to call it, on the stable coins, which is the digital dollars, because banks don't offer 5%, 4%, 3% on savings account. They don't do that, even though they make billions of dollars of holding your money and they do other investments with it. And Coinbase was like, no, you can't, because we're competition and we're going to offer 3 or 4, 5% years. You can't say that it's a law that we can't do that now, because that's going to, provide competition to you guys. And so now it's been stalled, and we don't know what's going to happen now. They're going to meet again, I think, next month and have a committee meeting over it, and who knows. But if it's in the Senate's trying to get, draw up the bill, and then it'll have to get approved there and obviously go back to the House because it'll be revised. And then it'll get put together and then get signed by Trump, who we know is very pro-crypto, so I think he would sign it in a heartbeat. But that's what's going on right now. And my thought is this. And just from watching that world over the last couple of years, it seems like there's a lot of big institutions that obviously are getting in on the ETFs. We saw like Ethereum ETFs, Bitcoin ETFs, Solana, XRP. They're moving on it. Even big ones like Fidelity and these guys that you wouldn't have thought 2 years, 3 years ago that would get into it. So you're seeing that movement pretty significantly, a lot of inflows. But I think there's a lot of money sitting on the sidelines that once the regulation, once the Clarity Act gets passed into law, because I don't think a lot of these big institutions want to risk their reputation. And you guys might be in a similar spot where you're like, look, we're catching it, we see it, we're a little bit here and there, but we're not like going all in this thing because we don't even know what the hell it is in terms of law and how it's regulated, and it might be gone in 2 years. I don't think that's going to happen, but we don't know.
Alex, it was well over 120,000 3 months ago.
Bitcoin was, yeah.
And,
yeah.
You know,
now it's at 95 or whatever it is.
Whatever,
yeah, right.
So
yeah, but if you look, I think 2 years ago it was like 65 or something, right? And it's performed exceptionally well, but we are in a little bit of a winter right now for sure. And I think some of it's just liquidity. Obviously, that's a big deal. There hasn't been a lot of liquidity for risk on assets. And then I think the other thing is just regulation and laws around it.
Yeah, so, I think institutions, like gold is still different. It's like the ultimate real asset because it's thousands of years of history and kind of use as a currency and use to like central banks using it. And then you have something like, and so like the uncertainty around what is this new thing going to look like in 3 months to 6 months to 6 years to 20 years. And then also you have the ability for governments to come in and just fundamentally change the rules on this from a regulatory, like China could just say no. And then suddenly the US dollar, like for example, they could end up, the US Treasury could end up issuing a digital version of the dollar at some point. Like if suddenly the tokenization let's do it with the US dollar. There could be other quasi government entities that start competing assets, and then what does that all mean? And
but they're probably going to build on Ethereum or blockchains that are already out there. I would think they're not going to probably create their own blockchains.
That's right. They would outsource the no doubt they would hopefully.
By the way, gold and silver had a hell of a run,
all-time high
in 2025. That was wild.
And it's like, did these other assets have good runs, or was it really more people going, I don't like the dollar right now?
Oh, for sure.
So
for sure it is.
It's just
I think for sure it is. Well, because you guys know this. We're going into money printing season. It seems like QE's back, and the Fed's gonna add to their balance sheet, and they're gonna start stimulating. And then midterms are coming up, and they're gonna start pumping the economy, which drives the value of the dollar down, right? So
you can explain a good some of the returns in crypto from natural debasing of the dollar, but there's still this what I call a naturally occurring Ponzi process in play. What it requires is a greater fool. It's not a future cash flow. It's a greater fool theory, which is somebody has to be willing to pay more tomorrow for it than somebody's paying today. And the rationale isn't like some sort of discounted cash flow, which is, a stock, a bond, any other kind of financial asset, piece of real estate, farmland. It's all priced based on the present value of future cash flows. A currency like gold doesn't have a cash flow. Neither does cryptocurrency. It just is.
Right.
And it's supply demand. And it's like, so why is that worth more tomorrow than today? The cash flows didn't grow. It's just it's speculation, and it's the theory that somebody's going to be willing to pay more for it tomorrow than they did today.
Yeah, I think when you look at Ethereum, Solana, XRP, where they do have the real world utility and people are building things on them, that I think you could look at and say, if the whole world being built on this chain, it's probably going to be worth something because it burns the ETH fees as every time you do transactions. But I do think Bitcoin, you're right about that, where it's a lot of speculation. And I think even a lot of the other coins are just, hey, we think things are going to be built on this. We think this is going to be the future. We think this is going to be the technology. We don't know. And also there's no regulatory clarity on it either. So we don't even know if it's going to get shot down or if we're going to be able to do it.
Oh.
So, but I think you guys would agree that's also some of the times when it's the biggest risk is also could be the biggest return potentially. Potentially. But
typically how I think Bitcoin it's had a pattern, right? It gets cut in half every few years.
4 years,
and then doubles again. And there's kind of a, I don't know if it's going to be a long-term good investment, but I'm like, if you're going to trade it, make sure you're looking at that pattern and you're not buying at the wrong time.
Right.
And
So if you had to guess 5 years, do you think it's over 200,000 a coin, or do you think it's zero or less?
well, I think at some point, 5 years plus from now, it will be over that.
Yeah.
And then I think there's a chance 5 years from now, it'll be 5 years or more, it'll be maybe 75% below that too. So it's like,
Really?
what time frame? Because it's going to continue to go.
Don't you think the volatility kind of drops though as more institutions, ETFs? It's not like big money's coming into it, so it's
Well,
kind of like stabilizing a little bit.
I think by that point this is the hard part. You have to project future presidents, future Congresses,
for
future,
sure.
you know, and
which is
it's like-
impossible to do.
And it's very like I don't know if governments are going to step in and like be able to impact the price of gold a ton. Maybe they are, central banks and such, but they can step in and dramatically alter crypto assets with just
as of now
a
they
stroke
can,
of
yeah,
a pen.
yeah.
And so, yeah, that's one of those things. Like in order to forecast, you have to be a real futurist.
Yeah.
Beyond a financial person,
Yeah.
to figure out what's going to happen there.
Well, no one knows what's going to happen. That's the thing. Yeah, yeah.
And you know, and what do I know? Because this is 2026. I thought I'd have my flying car by now, and I don't. Although I have a self-driving car.
Maybe we're getting close. Elon's up to some pretty cool stuff, so we'll see. But do you guys think that money makes you happier? What's your relationship with money? I'm curious.
I think the absence of money makes you miserable.
I agree.
But I think that there's some sort of happy medium where the incremental increase of dollars does not drive any more positive utility. And I think there's been a good number of studies on this, but you hit a certain threshold of income or wealth, adding additional doesn't make you any happier, really. And I think there might even be a negative correlation at some levels, because you get to a point where suddenly your wealth becomes more of a hindrance to some people anyway. And I think that's probably why a lot of wealthy people, they get to a point, they think about the pledge, and they think about doing other things with their dollars because they realize that additional dollar isn't driving any more joy into their life, and nor is it really nor is it helpful to their families at a certain level too. So
right. Well, Alex, I'm from a family of business owners, so I've lived this. They went through a liquidity event back in 2005. My grandpa sold his home building business, Town and Country Homes. So I got to experience kind of the firsthand, what it means to inherit significant wealth and what that, what kind of emotions that provokes within a family. And really what I would say is it made us so much more appreciative of the hard work that both, my parents, my grandparents did to bring the company to what it was, to bring it to a sale. And it allowed us to do things that made us happy. I don't think the money itself gave us any sort of happiness by itself, but it gave us the freedom to travel together. It gave us the ability to go down to Florida every year and stay together. I'm one of 31 cousins.
Wow.
My mom's one of 7. They were all part business owners of this company. And so it was very unique situation for me to get to experience that firsthand. And what the biggest thing they did with the money was give back to the charities that they loved. I often talk to my clients and I say there's 4 buckets you can put your money in. You can spend it, you can give it to the ones you love, you can give it to the organizations that you love, or you can give it to the government. And I really want to
not do the last option as much as we possibly can.
I work with them, on a daily basis to make sure we're prioritizing those first 3 buckets.
Nice.
And so
that's
well said.
Awesome. Yeah. That's really well said from both of you guys. I agree. I think, I've been in a place when I didn't have much money, and it sucks to worry about money.
Yeah,
it freaking sucks. And when you're going to the grocery store and you're like, man, can I afford this? And or you go out to dinner and it's like, oof, that's $100. Like, I probably shouldn't spend that, Versus when you can go to the grocery store and not really look at pricing so much, or you go to dinner and it's completely stress-free because you're not worrying about anything. You've got money in the bank. That's a good feeling. But when you get to a certain point, does it make you happier being at, this amount of money versus this, or $1 million versus $2 million or 10 or 20? I don't think so.
Yeah.
I don't think so.
Yeah, and I think we're at a state too where I think you'd rather be kind of average from a wealth perspective now. You're better off being average from a wealth perspective now than you were being the richest man in the world 100 years ago.
That's a really good point.
That's
really good point.
It's wonderful that we've kind of hit that level where a lot of people are not day to day going through life worrying about the basics.
Yeah.
You know, some are still, and we need to take care of that. But most people are not worried about that. I mean, for most of human history, life really stunk. Like, it was hard.
It was
like
challenging,
really
very
bad,
challenging, yeah.
and it was survival day in and day out. So
Yeah. Yeah. If you think, yeah, it's a good point too. If you think about, if you went back 2,000 years ago, the person today, even a lower income person, middle class, lower income, they're living better than the king lived 2,000 years ago.
yeah, it's like
running water. They got food. They
Or
can
it's like-
order food at their house. They could.
well, just
I
the
mean, it's-
healthcare thing. It's like,
so-
you got the flu, you're gonna die.
Yeah.
I
For
have
sure.
$1 billion. Doesn't matter.
Yeah, it
you're
doesn't
gonna
matter.
die.
Yeah,
You know,
there's
we
no
don't
one that
know
can
how to
fix it.
deal with that.
Yeah, you broke something, or you need some type of surgery. There's no surgeries. That's
Yeah.
not a thing,
Yeah.
right?
Well, you're never gonna walk again. Sorry.
Yeah, that's it. So, and I think life does come down to perspective.
For sure.
Just how you're thinking. It's easy to wake up every day and go, "Oh man, this didn't go right. I don't have this, or this is going on." And I always just bring myself back to, man, look around you, dude. You got an awesome family. You're doing something you love. You're financially set. You know, you're in a good place. You're not struggling, and you're able to make an impact. And like, I don't know, what more could you ask for? You're healthy. You know,
You live in the land of the free.
that's it. Yeah, and you live in the
Right.
greatest country in the world. I don't care what
Yeah.
anyone says. You know,
Yeah.
we got challenges, yes, but it's a great country.
Yeah.
So, are you guys bullish on 2026? What's your outlook this year? What do you think?
You know, we don't try to predict short-term market cycles, but I think valuations are high, which I think are going to constrain to a certain extent where we can go over the next 5 and over the next 10 years from a stock market perspective. There's but when you kind of look at what's in place right now, we probably have a couple more Fed cuts. I think we have a lot of potentially positive momentum things coming. I think there's plenty of room for the markets to continue to put up another good year. Whether it's double digits or not.
Yeah, I agree.
You tell me. But sometimes the trend is your friend, and you ride the horse in the direction that it's going. But I don't see significant cracks. I do see some softness in the labor market, but I think that's more of a healthy thing at this point, because the big concern of the market is inflation. And I think is that if the labor market stays cool, doesn't get too hot, that allows for the Fed to continue to lower rates, which I think for the stock market and financial assets is good.
Really good.
Because
Yeah,
we're one of those situations where a little bit of bad news in the labor market is kind of a little bit of good news for the
I
stock
100%
market.
agree.
So,
Yeah, don't make it too good, because they're like, all right, we ain't cutting anything this year, and it's like, all right, dude, interest rates are pretty high, mortgages are tough for people to afford. But I was gonna ask you one other thing about that this year. Oh, the labor market. Yeah, I think that's one thing. That's like the one area that I would look at too, and it's like a little concerning, because if it keeps dropping, it could be a concern. But also, I think about AI and technology. Does that jump into there, where maybe that kind of helps support that a little bit as well, where we don't need as many jobs?
well, I think that's the trick, is we don't need as many jobs, and I think we're on the cusp of realizing just how many fewer jobs we need.
Yeah.
And I think that requires the economy then to create these jobs, and that's always happened. Whether it's replacing the horse with an actual plow, productivity increases. When it was even Microsoft adding Windows for the first time. Imagine what business was like before people had email and computers. Everything sort of allowed us to do things with fewer people, and AI is going to be another leap in that regard. But then the economy has always responded by generating jobs in areas that we never anticipated. Like, did people think that there'd be these massive chip companies building chips for AI a few years ago? Did people think that there'd be self-driving cars and a bunch of engineers deployed on how to figure out that? No. And so there's a lot of, and so I think but there's a transition process. The unemployment rate will probably go up. People will be out of work for a while. They'll need to be retrained.
Yeah.
And there will be new industries being created.
Yeah.
And people will, I think over time, the supply demand will work its way out. But
Yeah.
and I am excited though. I mean, Elon Musk has talked about the notion that at some point in the future, work may be like
Optional.
And we're kind of hitting that area in Star Trek. A lot of these things are happening where people they don't use money in the future.
That's true.
Man,
I don't know how I feel about that though.
Where there's kind of like maybe there's no constraint to resources at some point. Where
that's cool.
Anybody who wants to own a really amazing car will be able to, because you'll be able to push a button and AI will create.
Maybe
theoretically, and so there could be this opportunity. Like for people to really work because they want to and because they want to be productive. And
Yeah.
And that would be an interesting future. But there's going to be there's going to be this period where politics is going to have to deal with that too.
Yeah, for sure.
Because if you own the businesses and you own pieces of the economy that drive this tremendous AI wealth, you're going to do very, very well. And then there could be this period where the labor is not doing well. And so it's like, how do you transition that? At a certain point, history shows that at some point there's pitchforks that come out if there's too much politically. Yes. The pitchforks come out if there's too much inequality occurring.
Yeah, for sure.
And particularly when the bottom half is suffering.
Yeah.
If the bottom half is doing really, really well, then you're okay.
You got the rich people with humanoid robotics in their house or driving flying cars. Then you got the people at the bottom that are suffering.
They can't even eat, or
that would be a problem.
Are homeless and can't, are really suffering, struggling.
Yeah. I do hope that it does work out like that. I do hope that it does. It creates an opportunity where people can focus on maybe something they're passionate about or their purpose, or maybe you got someone that loves to paint or do poems or theater or whatever it is. And now because they don't have to have that job they hate that makes $45,000-$50,000 a year, they can go do that. Yeah. I mean, that would be kind of cool. Or maybe they like to build stuff and then they're going to do that instead of having their job in whatever industry that they have, or that's a white collar job maybe. So there's that opportunity too. Yeah. Well, this has been a great conversation. I really appreciate you guys coming on. I had fun. I mean, this was just some fun back and forth. Yeah. Awesome. Where can people find you guys? Who should find you? And where do they find you? How do they connect and learn more about what you guys do?
Yeah, great. I mean, go to our website, www. You still have to say that now? www.
You can't. We'll link it up in the description.
Check the description. Vistamarkllc.com. If you go there, you'll find us. But if you're the folks that should find us, we hope, if you're looking to invest, you're an individual who has surplus funds and you want to invest, or you need a new financial advisor, please reach out to us. If you're an institution or a nonprofit, an endowment, or a foundation, and you're looking for help there, please reach out to us. And if you just want to say hi, come by. Stop. We're
in Hinsdale.
Our main office is here in Hinsdale. We have an office in Phoenix. We have an office downtown Chicago. So we'd love to chat with you. And if we can't help you, there's a pretty good chance we can point you in the right direction.
Love it.
That's for sure.
Thanks again for coming on the show, guys. Appreciate it.
Thank you, Alex.
Thank you.